It's been a short week with Memorial Day, but through May 29th, the S&P 500 is up 1.6% and the Nasdaq 100 is up 2%. Pullbacks continue to be shallow, and it's our view that they'll remain shallow because this is still the most hated stock rally. Now, what do I mean by the most hated stock rally? Well, I mean, it's been a V-shaped recovery, and investors really have been skeptical during that entire rise. I think it comes down to a sizable perception gap that, in our view, the tariff war and concerns have a bark worse than the bite.
Markets are climbing again, but you wouldn't guess it from the mood on Wall Street. As May wraps up, the S&P 500 is up 1.6%, and the Nasdaq 100 has gained 2%, despite a shortened week due to Memorial Day. Yet, the rally feels strangely quiet, almost hesitant. There are no celebratory headlines or euphoric cheers, just confusion. How can stocks be rising when sentiment still feels stuck in a bear market hangover? Tom Lee, managing partner at Fundstrat, calls this the most hated stock rally, and he's not wrong. The market is climbing a wall of worry, with shallow pullbacks and stronger than expected momentum, but instead of excitement, there's skepticism. For months, investors have been watching the recovery with suspicion, unsure whether to trust it or fade it. Lee believes this doubt comes from a psychological disconnect, a gap between what investors fear and what's actually happening beneath the surface. Take US-China tariff tensions, for example. While they've created noise, Lee argues the economic impact has been far less damaging than feared. Markets, he says, are pricing in reality, not headlines. That reality includes resilient earnings, improving economic data, and liquidity still flowing through the system. Ironically, the longer this unloved rally lasts, the more fuel it gains as sidelined capital slowly returns and skeptics start to fold. Lee's takeaway is both bullish and psychological. When everyone expects the worst but it doesn't happen, markets can truly surge, not because everyone believes, but because they stop watching.
Yesterday, on May 28th, the International Trade Court ruled against the Trump tariffs. Now, it didn't remove all of them, but it ruled against them. And on Thursday, May 29th, the D.C. District Court Judge Contreras ruled that tariffs are illegal. So it's two cases ruling against White House tariffs. But on the same day, the Federal Court of Appeals issued an administrative stay, which reinstates the tariffs at least through June 9th. But you can see this is getting quite complicated. And the White House is insisting nothing has changed after the tariff rulings. And in fact, Goldman Sachs highlights that there's many measures the White House can take to implement or re-implement tariffs. But ultimately, the White House is losing leverage, and it's taking us closer to the end game because it's going to be difficult for the White House to re-escalate things when they're losing really court cases. And so I think what we're probably expecting is the White House to look for an off-ramp. Now, this is not a surprise because tariff threats have led to concessions, just like the Doge cuts, even though they're less than expected, have led to concessions. And even this budget and reconciliation bill, they don't have the cuts people are expecting in spending, but they have concessions. Now, hedge funds have increased their short interest recently, and that's contrary to what you expect, because when the market's rallying, you think hedge funds should be covering their shorts. But that's not the case. How short interest is increasing for the average stock. And there's still $7 trillion of cash on the sidelines. But maybe most importantly, and I've said this before, the investment outlook is better for stocks now, arguably, than it was in February 2025, because you've got tariff visibility, you have tax and deregulation visibility. The companies survived the fifth major stress test, which I've covered before, which argues multiples should be going up. And the Fed is arguably more dovish next year.
This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
Now, President Trump and Fed Chair Powell had a meeting today, But no surprise, it's not as if the central bank has changed their minds, and they're saying that they're going to support maximum employment and stable prices and will make the decisions solely based on objective, non-political analysis. Well, in my opinion, that means that it's going to be easier to make the case for cuts in 2026. Well, that's a dovish Fed next year, which is really, as you think about it, 6 months from now, that should be positive for stocks.
On May 28th, the legal tide began turning against Trump-era tariff. Two major rulings from the International Trade Court and a D.C. federal judge challenged their legality, casting doubt on the administration's trade policy foundation. Although an appeals court temporarily reinstated the tariffs until June 9th, momentum is clearly shifting. According to Tom Lee, this legal pressure is pushing the White House toward an inevitable retreat, making it harder to escalate the trade war while losing court battles. Meanwhile, market dynamics are evolving in unexpected ways. Hedge funds are increasing short positions, an unusual move during a rally, while a massive $7 trillion remains on the sidelines. Despite this, Lee believes the stock outlook is stronger now than earlier this year. Tariff risks are becoming more transparent, the Fed is leaning dovish, and corporate resilience has been tested. With potential rate cuts on the horizon, the stage is quietly set for another leg higher in the market. Beyond traditional markets, some see opportunity elsewhere. Michael Saylor, executive chairman of MicroStrategy, remains steadfast in his conviction about Bitcoin. As Wall Street navigates shifting monetary policies and political uncertainty, Saylor views the real long-term play as the quiet revolution unfolding in digital asset. For him, this revolution starts and ends with Bitcoin, signaling a fundamental shift outside the conventional financial system.
Volatility was a gift to the faithful. It scares away the tourist. It scares away the lazy. It scares away the people that are already conventionally rich, that have all the money. If you're a 20-something or a 30-something and you're willing to do the work, if you're willing to spend 100 hours or 200 hours, if you have more time than money, then the volatility of Bitcoin is a gift to you. If you have more money than time and you're arrogant and egotistical and you just pick the obvious, then if the volatility goes away, you buy Bitcoin. If people in the rest of the world knew what I know and they understood and they agreed with me, Bitcoin would go to $10 million tomorrow. And if Bitcoin went to $10 million tomorrow, I want you to think about how you would feel and how your viewers would feel, because you would lose 20 years of stacking opportunity during which you get to buy at less than $10 million. So the difference between $10 million and 100,000, that's what you give up if the volatility goes away and people start to agree with you.
The bottom line is, I think we're easily in 5 years' time, we're easily at kind of 300, 500, something like that. But if you could get a swing where it just goes much, much higher than that. Do you know what I mean? I mean, it's entirely possible that we have oh, here we go. Yeah, it's on page 293 for anyone following along with me. So the 5-year power line model shows the trend line in 5 years, and this was from last year, so maybe you'd have to move it up a little bit from this. 5 years would be at 326,000. But this is interesting. One standard deviation up is 667,000. Two standard deviations up is 1,853,000. And by the way, Bitcoin has traded at 2 standard deviations above its trend line mean, many times. So not many times, but in each cycle. I think there have been 5 of them. And then 1 standard deviation down is 180. So, in 5 years, I mean, I could easily see it be $500,000. In 10 years, the trend line is $1 million. So that would $1.1 million actually. So that and the 1 standard deviation up is 2.2 and 2 is 6 million. Now, typically if you look at it historically, and 2 standard deviations above the trend line, it doesn't generally stay there for very long. It spikes up, as we all know, and then it corrects. So, but in 20 years, the trend line is 7 million. So, I mean, these are some big numbers, and that's what happens when you compound something out over, year after year. I mean, it is a scarce asset, and there is a large amount of fiat money that's going to move into it as they become aware of how scarce it really is. And, I'm sure you're familiar, it's in the book too, Jesse Meyer's chart on, just the total available market. There's $9 trillion, there are $9 trillion of fiat things out there if you include real estate, 900 trillion. You know, what's Bitcoin, 2.1 trillion today? I mean,
If the world saw Bitcoin the way Michael Saylor does, its price wouldn't just hover near six figures, it would soar into the tens of millions. As executive chairman of MicroStrategy and one of Bitcoin's most passionate advocates, Saylor believes we're still in the early stages of a revolution that most people don't fully grasp. He sees Bitcoin as the most misunderstood and undervalued asset of our time, not despite its volatility, but because of it. To him, price swings aren't chaos. They're a natural filter that shakes out the impatient and uninformed, leaving only those with true conviction, often younger investors willing to learn and hold long-term. Currently trading around $14,000, Bitcoin is consolidating after hitting an all-time high of $112,000 in May. While some see recent price pullbacks as setbacks, these pauses are actually setting the stage for the next surge. Market dynamics remain tense, with a tug-of-war between short-term sellers and growing demand from long-term holders and institutions. Exchange reserves are at multi-year lows, signaling a supply squeeze that points toward aggressive future move. This accumulation phase, alongside Bitcoin's strong correlation with expanding global liquidity measures like M2 money supply, supports a bullish outlook. Looking ahead, analysts predict Bitcoin could reach new highs around $130,000 by late summer, with longer-term forecasts reaching well beyond $168,000 by the end of 2025 and potentially into the millions by 2040. This reflects growing confidence in Bitcoin's role as a fixed supply hedge amid expanding global liquidity and economic uncertainty. For now, the current price consolidation appears less like a peak and more like a necessary pause before Bitcoin's next major breakout. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.